For sure, my friends, we have a problem. Houston, we have a problem because between CZ's crazy announcement, he's talking about the supercycle, which we'll discuss in a moment, and the influx of fake gold bars. And yes, with the explosion of gold breaking through $5,000, we're going to talk about it. Some people are taking advantage of this to make tungsten bars or even just clay bars simply coated with a very thin layer of precious metal, as you can see here in the image. And there are a lot of individuals who are realizing after the fact that what they bought was completely fake. By the way, I'm preparing a video about gold for you very soon. But as I was saying, when the metals frenzy rises, as we'll see, counterfeits follow. It becomes extremely difficult to verify the actual purity without specialized equipment, especially when it comes to gold and even silver. That's where the comparison with Bitcoin comes up very naturally, because BTC can't be faked. It can't be filled with tungsten, so to speak. We had that here. The demonstration between Pitch, Shift, and CZ was simply overwhelming. I talked to you about it on the daily update. And here, Bitcoin doesn't need a laboratory. It doesn't need to confirm its identity. And that's the real strength of Bitcoin. Verification is built into the protocol, and it's transparent, it's instantaneous, it's mathematically impossible to cheat. And the craziest part of all this is that gold, as I was telling you, has just officially hit $5,000. I'm gonna put my glasses back on for the first time in its history. So it's a symbolic level that shows just how much capital is seeking refuge in precious metals. And since the beginning of the year, gold has only had 3 or 4 days in the red. It's completely crazy. And of course, right after that, silver is following the same trajectory with a new all-time high. And here, we're talking about $100. So 2 records at the same time on 2 assets that are often seen as macro stress barometers. You know this if you follow the Daily Alley. And that says a lot about the level of nervousness a bit in the markets, especially the riskier ones. So what explains gold's surge? What also explains Bitcoin's crash? That's a bit of the current situation, but what is the market trying to tell us? That's exactly what we're talking about today. So let's get straight to the heart of the matter, because what just happened is far from trivial, because the numbers speak for themselves. Gold and silver have just made history. Both of them. At the same time, and after these 2 historic records for gold and silver, one might wonder who is seriously and truly fueling this rush towards metals, precious metals. Because in reality, retail investors can't cause this kind of parabolic movement. It's been 3 weeks now that we've been talking about it. There's only one reason for this, and it can only come from a major player, which is simply China. Because, in fact, China is accelerating its move away from the dollar amid its well-known confrontation with the United States, massively reducing its holdings in US treasuries, while steadily and aggressively increasing its gold reserves. If you follow the daily updates, I actually made a specific video about this, showing how China and all the BRICS countries have been massively accumulating gold. So this is a strategic shift that confirms a trend that's already been visible and tangible for some time now. Even for several months now, it's clear that Beijing wants to be less exposed to the American financial system, which makes sense given the well-known trade war, and to focus more on assets considered to be free from political risk. And let's talk a little bit about Bitcoin and the crypto ecosystem, because beyond the market, which seems to be on standby these past few days, there's a real reality that many underestimate. According to Poisse, Watt, and Cooper, institutional adoption is now irreversible. In other words, we're no longer in the experimental phase where you can run small tests just to see what happens. No, we have banks, we have companies, we have payment giants that have already integrated crypto rails into their systems. Whether it's payments, settlements, treasuries, or accounting balance sheets, it's already in place. So everything related to stablecoins, tokenization, instant transfers, these are no longer just gadgets here. These are tools that are used every day. We can see it on this chart. And they are at the very heart of traditional finance. Already, as of today, to move money, to reduce costs, and to speed up operations. So we might say that we're using the technology, but not really the medium itself. That's another debate, it's a different question. But the finding from PricewaterhouseCoopers, PwC, is actually crystal clear. Because the real question that emerges isn't whether institutions will use crypto, but how quickly it will gain momentum. And speaking of which, let's talk a little about American politics just for a change. Because things can move very quickly. Because we have the famous crypto market structure. bill, which is one of the most important pieces of legislation to clarify things, at least for this year, for the start of the year, to finally clarify the rules of the sector, because it would now be closer than ever, almost ready to land on Donald Trump's desk. So we've been hearing this for quite a few days now, but it seems like it's imminent, maybe as soon as next week. And so we have. The Representative French Hill even stated that he hoped Trump would sign it soon, reminding everyone that it's a very important piece of legislation. In other words, we're getting closer to a moment that could completely change the regulatory landscape in the United States. And so the way institutions will enter the market, and while regulation is moving forward, we also have another giant in the sector that's continuing to make some moves, Binance, which is reportedly considering. Now, some people say Binance, others say Binance. Well, I say Binance the American way, you know. Yeah, for sure. Which is reportedly considering relaunching stock trading on its platform. It's a product they had shut down, let me remind you, in 2021. And if this is confirmed, it would be a very strong signal. That would mean Binance is looking to return to the space where crypto and traditional markets merge, bringing both together. This comes exactly as Wall Street is ramping up on tokenized assets, especially with BlackRock. By the way, we have a favorite for the Fed, who is the former CIO of BlackRock, as I mentioned to you yesterday. It's a way of saying they don't intend to leave the field to the banks and the new ETFs. No, they want to tackle things head on. And on the financial product side, in fact, there's an interesting development that just came out. Speaking of Binance, Grayscale has just filed an S1 form with the SEC to launch an ETF, this time based on BNB. It's a native token, just to remind you. Many people might use it on Binance, these days, as you might say. Anyway, the goal, as you understand, is to allow traditional investors this time to get direct exposure to BNB, which was rather resilient during the bear market. Not super high performing during this bull run, but still, it was very solid. Through what we call a regulated exchange listed product, without having to handle the crypto themselves. And speaking of maintenance, we also have CZ's point of view. I'm gonna change my glasses because he started wearing glasses too, but not blue ones. He went for black glasses. I don't know what this trend is, it's just nonsense. And CZ, who is likely to get quite a reaction from a lot of people, let me remind you, we're talking about the co-founder, or actually the founder, I think he's alone, or maybe he co-founded it. He claims that 2026, as you saw in the thumbnail, will be a super cycle for Bitcoin. So I even typed it into ChatGPT, what is a super cycle? It's simply a growing phase that can be more powerful than the traditional bull run pattern, and much faster too. And so it could completely break that famous 4-year cycle that everyone has been following religiously for over a decade now. And this theory is resurfacing more and more as we move forward. And it's notably being mentioned by the biggest players in our ecosystem. So if Zed is right, we might be about to enter a phase where the old benchmarks no longer really work, and where the market could accelerate without waiting for the usual schedule. So I agree with him. In the sense that I think the bottom we could potentially, I'm choking right now. People want to silence me, or my body wants to silence me. I could potentially see a bottom in the cycle, at least for this year, between May and October. Maybe I'll be proven wrong, but in any case, I agree that we could actually see a bear market that's shorter than usual, maybe less severe than usual, unless we have what's called a black swan event. A negative catalyst, we'll see. We'll talk about it again during the daily updates. But if we look now at what's happening a bit on-chain, I don't have the... Let me just bring it up here. What's happening on-chain, we can very clearly see the same dynamic. That is to say, we have the famous Bitcoin cycle that many analysts have talked about, and apparently it's not a myth since the beginning of 2023. Bitcoin's market cap was still lower than the combined market cap of all other cryptocurrencies. And since then, in fact, the gap has only widened, reaching a peak of $1.1 trillion in July 2025. And today, even though that famous gap has narrowed, it's still huge because we're talking about $606 billion in favor of BTC. And investors have favored, as you know, Bitcoin, not the altcoins. And this proves that even in a fragile market, demand remains focused where convictions are strongest. Now, let's get ready for next week. That's what I do every Saturday in the Daily Update. Because actually, without realizing it, we have some macro events coming up next week. And we quickly realize that the calendar won't be particularly packed with numbers that could shake up the markets. But in reality, there's only one date that really catches our attention. And you guessed it, it's Wednesday, January 28th. By the way, I'll be doing a special live session. Mark it in your calendar next Wednesday to follow the numbers. For now, we're expecting neither a decrease nor an increase, but rather stagnation. And then we'll see a bit about the Fed's tone, and especially Jerome Powell's, because on that day we'll have the Fed's decision on interest rates. But it's a non event, as I said, because it's already somewhat priced into the market. And as is often the case, actually, in this situation, investors will be listening, and so will we, especially to Jerome Powell's tone rather than the decision itself. And that day will be even more interesting because just before Powell, Donald Trump will be speaking. And you know what that means. His last appearance triggered a wave of volatility, a pump and dump. So there's nothing stopping that scenario from happening again. But it's not just January 28th we need to watch. The 27th will also be just as important for our ecosystem, because there will be a meeting about crypto structure. The bill I mentioned at the start of the daily update could finally bring some regulatory clarity. So we do have a few things to keep in mind. And of course, actually, these events will be minor if other geopolitical tensions arise, like we saw with Greenland. I'll leave you with this funny little video. Go check it out. I'll put it right here. Go ahead and click on it. Feel free to share it, and it's pretty viral. I'm going to put my glasses back on for the occasion, because actually that was the little nod I wanted to make. At the start of the video, in reference to this video, the little edit made by the Julian Roman channel. So there you go, I'll leave you with that. And we'll see each other on Monday for the daily update. Until then, for sure.